think about this. The US runs a budget deficit. Let's call it $2 trillion a year. How are they going to finance that? That means they got to go out and borrow an additional $2 trillion on top of the $38 trillion that they've already borrowed. Now they got to borrow an additional $2 trillion every year. That's just in new debt. So who do they borrow that money from? Well, let's break it down into two categories: foreign and domestic. Foreigners, again, corporations, whether you're talking about like giant, Toyota and Mitsubishi and Bank of China and, IKEA and whatever, like all these kind of big foreign companies, or foreign banks, foreign governments, foreign central banks, foreign hedge funds, foreign mutual funds, foreign individual investors, foreign, rich guys, whatever the case may be, have been net sellers of you. If you look at inflows versus outflows, buyers versus sellers, they've been net sellers of U.S. government debt over the past few years. It's not hard to understand why, right? Over the past few years, what have they seen? They've seen a guy who shakes hands with thin air. They've seen the disastrous withdrawal in Afghanistan. They saw a presidential candidate try attempted assassination, not once but twice. They saw the government shutdown. They saw Liberation Day. They saw this just complete and total dysfunction in the U.S. federal government. And they saw multi-trillion-dollar deficits. They saw the debt level rise to $38 trillion. And they see a Congress that is completely and totally unserious about doing anything about it. And so who wants to own that stuff anymore? I mean, the U.S. government bond used to be considered the safe haven asset. When the world was going to shit, people bought treasuries. They ran to treasuries because that was considered the safe haven asset, the risk-free asset. Not anymore. Now when there's chaos in the world, people are moving away from treasuries. The treasury bonds are no longer considered this risk-free asset, especially the longer dated stuff. Who in their right mind thinks that loaning money to the federal government for 30 years at like 4.5%, that's going to be a good investment for you? That's madness. I mean, inflation is already running at 4%, and you're barely getting 4% return, pre-tax, by the way, on a U.S. government bond for 3 decades. And you look at this kind of trend, I mean, that's crazy. So people are like, no, I'm out. So they've been selling. So if foreigners are no longer providing that pool of savings, right? Because you need a pool of savings that you can tap into to borrow that money from. So where's the pool of savings coming from? $2 trillion a year. Well, we got to get it from the private U.S. economy. But there's a problem, because the private economy in the U.S., the net savings rate, if you look at sort of the totality of corporate profits, various business profits, plus, household savings after all consumption and expenses and all that stuff's been paid, that kind of hovers between $1 and $2 trillion a year. So let's just pretend that's on the high side and say, and by the way, for 2025, the U.S. economy is, I think the net savings rate is on track for like well below $1 trillion. But let's just pretend for a minute that it's like $2 trillion in net savings. What that means is that the federal government would have to tap into every single penny, new money that's saved in the U.S. economy for that year in order to fund the deficit. Every single penny that you save and that Apple saves and that Elon Musk saves and that everybody else saves, all of that has to be loaned to the federal government, and then you're okay. Now you're okay. Your deficit, you don't have to worry about it, because at least, hey, we're borrowing today's savings, right? And we're spending it on, various investments and things like that. Maybe that makes sense, right? But of course that's not going to happen. You have years like this where your savings rate falls way below what the government needs to borrow. But you also have, let's even pretend that the economy is going to save $2 trillion. It's not like all that money is going to be available to buy treasuries. People are going to have to spend it on something else. Some people are going to go, well, hell, I gotta paint my garage. I got to build a new factory. So you take away that pool of savings from everything else in the economy and send it all to the government. And the likelihood of that happening is basically zero, right? So the question is, if you have to borrow $2 trillion a year, every single year, foreigners aren't going to give it to you because they're actually net sellers of your debt. And then you look at your domestic economy and say, $2 trillion is literally 100% of the entire capacity, the savings capacity of your entire economy. And we know there's no way you're going to be able to mop up 100% of the savings capacity of your economy. Then what are you going to do? Your only answer is to create more money. And this is what happens between the combination of the Federal Reserve, open market operations, and the commercial banking system and the primary dealer window and all this stuff. And we don't want to get into like the inside baseball of how central banking works. But on even in times like this where we don't actually have a formal quantitative easing program in place, there's still a lot of new money that's being created, and this happens practically every single day.